One. Hello and welcome to the Property Roundup on iPropertyRadio with myself, Carol Tallon, the show where we chat to industry experts to get a view on activity on the ground and to learn about new trends emerging. This show is sponsored by daft.ie, Ireland's most visited property website. Today, I'm delighted to be joined by returning guest John McCartney, Director and Head of Research at BNP Paribas Real Estate and Adjunct Professor, Associate Professor at UCD. John, you're very welcome back. Thank you for joining me today. It doesn't feel like a full quarter since we've spoken last.
No, indeed, Carol. Time flies, doesn't it? But nice to be back.
Well, thank you so much. I always appreciate it. John, you might just talk us through the latest construction PMI report, which is making headlines across Ireland this week. And, you know, I think it has been a particularly busy summer. Generally, you and I might have been familiar over past decades with a quieter period during the summer, and that didn't seem to happen this year in some respects. But you might just tell us what the data is confirming for us.
Yeah, sure. So, Carol, really, the construction sector activity in the sector was flat in August compared with July, and July in turn had been flat in comparison with June. And indeed, if you take the first 8 months of the year, really, I think the big takeaway story is that activity in construction overall has been broadly flat. So 50 is the watershed between month-on-month expansion and contraction. Anything over 50 denotes expansion, anything less than 50 denotes contraction. If you average the monthly PMI readings for the year to date, you're just over 50. So it's been very marginal expansion, but generally sluggish.
I'm conscious that all things need to be looked at in context. So is it flat coming off a particularly buoyant 2023, or what's the context around this?
Yeah, so it was again it was relatively sluggish last year as well, and the opening part of this year was slow. Then it picked up a little bit March, April, May, and has then steadied again through June, July, and August. So it's been a fairly pedestrian dynamic, I think, for the last 18 months, really. And part of that, I imagine, Carol, is what's happening within the sector. So there are different dynamics. Obviously, in the commercial sector, nobody is building shops or shopping centres. We haven't really seen much of that for getting on now for 15 or 20 years even. On the offices side, there is quite a lot of construction still going on. But this represents buildings being completed, and new construction starts in the office sector have been very, very few, simply because the vacancy rate has risen so much in that sector. So the commercial sector has been a drag on activity, generally speaking, and the residential sector has been the one that has been showing more growth. But neither of the two of them over the last couple of months have really been expanding.
And I think sometimes it's difficult for people who are listening in, who are following in the media, in terms of understanding. It seems over the past decade, we have a lot more data, which is welcome, but maybe we aren't so good at interpreting that data. So, for example, I really saw that this year in terms of planning. So the planning figures that were announced, say, at every podium event by our Taoiseach or Taoiseach or Housing Minister, and it was painting a very rosy picture in terms of planning. And actually, as we go through and look at commencement notices, that might be a slightly different picture. And what I was interested in terms of the latest construction PMI is that the index appeared to show a slight contraction in housing activity, but commercial expanded slightly. So is that correct? And if so, that seems contrary to everything we think about the marketplace.
Yeah, sorry. What you say, Carol, is factually correct. Now, I wouldn't necessarily read too much into it. I think the increase in commercial construction, and it was only very, very slight. It was just a marginal increase month on month in August, and that really reflects the completion of office blocks that have been underway for a long period of time, and there's just a push to get those blocks completed. And the finishing out process is probably more labour intensive than the earlier stages of that process as well. So it creates activity for all sorts of subcontractors and contractors. So I think that's what's going on there. And I wouldn't read too much into it because, as I say, I think that if we were to look forward 12 months, I think we will see much less office construction in Dublin as those new office buildings are completed. The pipeline of development won't be replenished by new starts because the vacancy rate's too high at the moment. So I think that's what's going on there. On the housing side, it really is, I think, an interesting story. So if you take the first 6 months of this year, housing completions were down about 8.5%. And therefore, what that means is we would need to build about 21,000 dwellings in the second half of the year in order for the government to meet its existing target under Housing for All, which is 33,450 units for 2024. And that would represent, a fairly significant increase compared with H2 2023. And I have been questioning whether that is realistic because we know from the Dublin Housing Supply Coordination Task Force that the number of dwelling units that were on site under construction as we entered this year was significantly lower than was the case when we entered 2023. So I think it will be difficult, certainly challenging for the government to meet its house building targets for this year. Now, we have heard an alternative view from representatives of the government. In a recent radio interview, Minister O'Brien has indicated that he thinks we will significantly exceed the target, which would mean really a supersonic H2. And indeed, the Taoiseach Simon Harris has said he thinks we will complete 40,000 dwelling units this year. I just don't see that is going to be possible. Now, Minister O'Brien says he can make his statement because he knows what's in the pipeline. If he has data that the rest of us don't have, then I think he should share it. But based on the data that I'm looking at, I think it is going to be difficult to meet these targets. Now, maybe these government spokespeople are referring to housing commencements, and there has been a very big increase in housing commencements, particularly around April. But that was triggered really by the deadline for the local authority levies waiver, which was then subsequently extended. So that only happened sort of getting into the mid-year, and therefore I don't think there would be enough time for the properties that were commenced at that moment to be completed within the current calendar year. So if their assumptions are based on commencements, then I would still be skeptical that we can deliver the figures that they're claiming.
Okay, John, thank you for breaking that down, because actually I find that, as somebody who is watching and commentating and indeed even writing reports on the market, I'm finding that confusing. And just in the last week, obviously we've had it. It has been the time for financial reporting, and along with that comes, you can call it explanations, you can call it interpretations, but essentially it's where we get a lot of insight from how industry is feeling about home building. And I know one of our construction leaders talked, I think he said he estimated Ireland's housing shortfall to be just under 300,000, about 293,000. Does that seem about right? Is that a figure you would be in agreement with?
No, I don't think so. I think it's completely spurious. Nobody, including your industry spokesperson or the Housing Commission or the ESRI, can have any idea of what housing demand is going to be in the long term. Absolutely not, because it's predicated on a number of things. Firstly, there is a sort of a reductionist methodology that sort of associates housing demand with the number of bodies. Now, that in itself is problematic, but if we just park those problems for a moment, the number of bodies that are going to need to be housed in the future will depend on the number of households that we have in the future. And that in turn will depend on population growth, which is determined by births, deaths, and most importantly, net migration, and also the degree to which that population then fragments into households, which is, I suppose, characterized by the average household size. Now, if you look back to the annual population estimates, which were published by the CSO, I think on the 26th of August, you'll see that 80% of our population growth is currently coming from net migration. And net migration is and always has been highly volatile. And in fact, we only have to go back over the last 3 or 4 years to see that. So when the COVID pandemic hit, obviously net migration plummeted because there were restrictions on international travel. And then it rebounded. And in addition to that, then the war in Ukraine triggered an inflow of maybe 110,000 migrants coming from Ukraine. So these are, very influential factors that completely disrupted any steady state pattern in inward migration. And now, Carol, I suppose if you just think about the inflow from the Ukraine, in March, we changed the support arrangements in respect of people coming in from the Ukraine and reduced the payments essentially that were available to them. And that caused the inflow from the Ukraine to almost come to a full stop. And that then has been followed up this month by further changes in respect to the benefit arrangements for people from the Ukraine that are already in Ireland. And that could very easily trigger an outflow, because it's very possible that those people that have come to the Ukraine and have been benefiting from fairly, I think, generous welfare payments, they may decide now that those are being cut that they could do better elsewhere, or indeed even if they couldn't do better financially, it might suit them to be closer to their country of origin. So net migration is extremely volatile, and what I've tried to demonstrate in my examples here, Carol, is that it's very difficult even 3 or 4 years ahead of time to try and predict net migration flows. So to claim to be able to do it over a period of 30 or 40 years is just absolutely not sensible. And anybody who believes that it can be done is not being sensible either. And so that's a huge part of these so-called, structural housing demand estimates. And it's very volatile. Nobody knows. And in fact, all they really are is an opportunity for sectional interests to pick a number that suits their own agenda and to run with that. And that's the way these forecasts are being used. The other thing I would say, Carol, is that housing demand is actually a financial concept. It's not about the number of bodies that need to be housed, or at least not exclusively about that, or otherwise, you would have, some countries where you've got a very dense population like China or India would have the highest house prices in the world, and they clearly don't. So, it's absolutely, again, foolish to believe that it's just a game of numbers. It also depends on people's ability and willingness to pay for housing. And some of that has to do with labour market conditions and pay and earnings and tax arrangements and all of that. And some of it has to do with government housing policy. And I recently saw Dara O'Brien, talking about the €91,000 of potential subsidies that are available to first-time buyers of new homes. So that in itself is a huge support for housing demand. In technical terms, it shifts the demand curve for housing to the right, pushing up prices actually, but also achieving more output because builders can get a higher price. And again, if you're trying to look 30 or 40 years into the future, will we still have those housing policies that are very supportive of the construction sector? We may, or we may choose to do something different, or indeed, we may not have the wherewithal to do it. At the moment, we're running big surpluses. That may not always be the case in the future, and the fiscal situation might not allow the level of support that's there for housing demand at present.
It's interesting when you say 30, 40 years down the line, because actually I know, speaking to industry, they're thinking after March 2025, will there be the same willingness to support home building in the way that it has been supported? So I don't think we need to look decades down the line. I think we're in a particularly interesting political year. And by the way, you touched on some things that I do want to come back to there, particularly around labour. But before we move on to that, just you touched on something earlier, and it was around the push that's on to complete office buildings. Do we know, are there occupiers for the majority of office buildings that are being pushed to completion right now?
Yeah, so in some cases there are, but mostly not. Okay. Again, Carol, I probably wouldn't be anxious for the developers of those buildings. So they've built them speculatively. It may take them longer to get the properties let up than would have been their expectation when they started. And that'll obviously feed into financing costs and all of that sort of thing for them. So it's not pain-free for them. But given the shift in occupier demand towards office blocks that meet the highest ESG credentials, I do think that most of those, if not all of them, will be attractive to occupiers, and they will be leased up. But I think there are two questions. We've had very significant, about 150,000 square meters of space already completed in the first half of this year. There's another 110,000 square meters in Dublin. This is. There's another 110,000 square meters scheduled to complete before year end. That would be about, if it all comes together, about 260,000 square meters of space delivered in the context of a market that has about 4.3 million square meters. So it's a very significant addition of space. And then next year, again, we probably have 140,000 square meters scheduled to complete in 2025 before the tap turns off in 2026. And notwithstanding the fact that these buildings are all built to a very high energy rating and all of that, it will mean that there is quite a lot of even new grade A space that is competing for a limited number of tenants. And it may well be that the rents for these prime buildings get bid down somewhat. So I'm confident that they'll get leased. But my expectation is, I think that prime rents will fall because these developers will be in competition with each other to secure tenants. That's the first thing. And the second thing is, again, I think it will probably take some time for this to happen because it's just a bit of a campaign to get tenants in the current market. And then the third thing is, what is the second order consequence for the older buildings? Because about 2/3 of tenants that have taken office space in Dublin since the beginning of 2023 are moving from somewhere else. So if we do get a dynamic of these new buildings being filled, the likelihood is they're going to be filled by tenants or occupiers that are already in the Dublin market in other office accommodation, and they will be vacating space. And the question is, what happens to that older space? That could be difficult, and we could see rents continue to fall. They're already falling in that segment of the market, and I think they could continue to fall even more sharply for a period.
That's interesting, because I know you and I started talking about the future of work, what that means for the office in the early days of COVID. And I know we've touched on it every few months since, and I would still be of the view that it is still unsettled. I don't know how you're feeling as we head into the latter part of 2024. But I think it's interesting when you talk about the second order consequence of the older buildings, because even as you were talking about the new grade A buildings that are completed that are yet to find tenants, it means the older buildings are really going to be behind the curve in terms of being able to compete. So there's two kind of main questions I have out of this. First is if companies are coming from space, does that mean we're not generating new companies, or companies are not growing to the same extent, or that maybe new companies are opting for a non-office space location? So I suppose that's the kind of the first question I have. And the second one I have is, last year we started to talk about this trend of office buildings being converted into housing. That's a global trend. It's happening in cities right across the world. Plenty of cities in Europe. We've seen some limited examples in Dublin and Cork. Is that something that we're likely to see?
Yeah, so to the first question, Carol, thankfully, the proportion of new entrants and expansions within the mix of lettings is on a gradual upward trend. So obviously, after the pandemic, and then in addition with the tech shock, which happened sort of in the third quarter of 2022, the number of new entrants into the Dublin office market and the number of expansions as a ratio of the total number of lettings fell somewhat. Now it's recovering, but the recovery is fairly slow. And as I say, the bald statistics show that 2/3 of the space that has been let since the beginning of 2023 has been occupiers moving. Now, some of them are expanding, some of them are downsizing. But either way you look at it, even the ones that are expanding, if they take 5,000 square meters and they hand back 3,000 square meters of vacated space, then the net absorption arising from that move is only 2,000 square meters. So it's a lot less than it might appear at first glance if you just look at the take-up statistics. So I think, look, the economy is sort of scheduled, actually, the macroeconomic forecasts are scheduled for an improvement. I mean, we had the national accounts out last week and they were quite weak. Ireland is technically in a recession if you just looked at it in terms of GDP. The labour market has been quite good. So probably the underlying truth is somewhere between the two measures. We would expect, I think, that the economy will improve somewhat over the next 2 years, and that should lead to more new entrants, I would hope, and it should lead to expansions of office space rather than contractions. So I think all this is moving in the right direction, but slowly, and I think it will not come fast enough, Carol, to absorb the quantity of new space that's been delivered net. And that really is the challenge, because when vacancy rises, rents always come under pressure, and that is an iron law. And people will try and bamboozle you and blind you with science and tell you, oh, it's all about the different segments of the market and all of that. At the end of the day, it's not. If vacancy rises, rents are under pressure at all levels of the market. And the simple reason is this. You know, if you have a grade C building and it's vacant, what are you going to do? Unless you're prepared to bite the bullet and do a deep retrofit, and there's a lot of capex required to do that, the reality is you're just going to have to drop your rent, and you're going to have to keep dropping it until you're competitive with the grade B offer. That in turn passes a headache then onto the grade B guy, and he says, okay, how am I going to fill my building? And his only option is to countercut, and that passes the problem further up the ladder. So if there's vacancy at any level of the market, it does tend to, via a sort of a process almost like capillary action, it does tend to weaken rents at all levels of the market. And I do expect that that's what's going to happen over the next 18 months. And it has been happening already. On your second question of sort of office to resi conversions, I think it is a thing, Carol. There's no doubt about that. And there are quite a number of sort of schemes that have been sort of eyeballed for that. But I wouldn't see it as being a hugely important dynamic for the market, partly because you need the right kind of office for this. The width of the footplates, or the floor plates, is important. Because if they're too deep, it's very hard to get natural light into the center of these buildings when you divide them up into sort of residential sized rooms. It can be done if there are articulated facades, for example. That makes it easier to do, but it's still challenging, and many of the buildings around town are just the floor plates are too big for it to make sense. And then there's the costs of doing it. And we have a few examples where the costs actually, once it was all done, the product wasn't any cheaper than what was available. So I think it will happen. I think the more likely thing is that some of these buildings are going to be redeveloped as hotels. So there is a building on Westmoreland Street there that was sold for conversion to a hotel. It's rumoured, at least, that the Ulster Bank building on Dame Street was to be converted into a hotel. I'm not sure if that deal actually went through in the end. I'm not sure. There's another office building on what do you call that? Frederick Street. That was sold with a feasibility study in place for the option to convert to a hotel. So I think that's probably more likely than office to resi. But to your key point, Carol, if this was to happen, in terms of the office market dynamics, what it would do is it would subtract from the existing stock, and that would act as an offset for the inflow of new development that's coming and adding to the stock, and that would be beneficial to the vacancy rate, but I don't see it being material.
Okay, well, look, I'm conscious of your time, but I do want to hit at some of the market dynamics that you spoke about. But just before we leave offices, just for anybody who wants a little bit of additional information, John has an opinion piece in the Irish Times today looking at the Dublin property market, describing that it shows signs of life, but still too early to call a market recovery. And there he actually goes in and explains the 250,000 new square meters of new space that is due by the end of next year. So anybody who wants to just get a little bit more information around that, head over to the Irish Times today, and John has an opinion piece there. John, I am conscious of your time, but you touched on something, and I'm not sure that I now understand what that is, because we've been saying it for so long. You talked about, just when we were looking at construction, and particularly in the context of the construction PMI, that there are a number of market dynamics at play. What exactly is happening in the marketplace today? That's a very big question, but essentially I'm trying to understand, because you talked about both inwards and outwards migration, but there's some quite interesting data around our labour force in construction at the moment. Last week saw the launch of the MMC Accelerate, or SkillNet MMC Accelerate, because the government is very aware of a critical skills shortage for part of construction, particularly around offsite and modern methods of construction. So what exactly is going on? Because one of the biggest changes around construction wages. So can you break down the dynamics at play in the construction market right now?
Yeah, sorry, I think I can, Carol. So if I was to summarize, I think the outlook really for commercial construction is that it's going to taper off. So, for the next 6, 12, maybe 18 months, we will see a strong office building as those properties that are already under construction get completed. But as I said earlier, the pipeline of new starts coming behind them has tapered away to very little. So over time, I do expect that commercial will pull back. I don't see any real resumption of retail construction. Logistics construction has also been slowing. So this is the construction of warehouses. So the occupational market for sheds has weakened somewhat as well. It was very strong over the last couple of years, but that has leasing activity in that market has slowed. So I think commercial will taper off. On the residential side, as I said earlier, I think we're not going to have a very big year for housing construction this year. I do think it will be a challenge to meet the government's existing targets for the year. However, the commencements that sort of came in a glut around April, May time, I think they will ultimately flow through to on-site activity and ultimately eventually to completions. And I do think that will support residential construction in 2025 and beyond. And indeed, speaking to the construction companies that are on the panel of the PMI, I think it is very clear that their focus is on residential construction, and they are generally speaking quite confident that the government is prepared to underwrite construction activity or residential construction activity into the future. And that just seems to be a political reality. The government will step in and do what it takes to make construction of new dwellings viable.
And you described it as a political reality. Is it a current political reality? And if we have political change in Q1 next year, is that likely to continue?
Yeah, I think there does seem to be a bipartisan view that we need more dwellings. Whether that is an accurate view or not, I'm not necessarily so sure. But it does seem that all of the political parties are on board with the idea that we need to increase the level of housing construction. And then it's really the difference is really only in how that is funded and managed. But generally speaking, whether it's done privately or whether it's done directly through public bodies, the net result is that the government is going to be paying for a lot of this, I suspect. And at the moment, they're willing to do it, and the fiscal situation allows it. And I don't see really political risk to that. I think the only thing that can derail that would be a fiscal crisis.
So demand exists, we have political will. So where are the chokeholds of the system? Why isn't this happening now?
Yeah, well, as I say, we had a fairly subdued pipeline coming into 2024. Carol, certainly in Dublin, we don't have the data for other parts of the country. And that really reflected a strong uplift in completions during 2023. So a lot of the properties that had been on site under construction in 2023 were completed in that calendar year. And that left us with a sort of a diminished pipeline as we entered 2024. Now, the pipeline is picking up again, particularly after the raft of commencements mid-year, but it'll be 2025 before we see them. What are the impositions or the The impediments to this, well, as we've said, labour now seems to be hard constraint. It does seem that construction firms are having to battle to get employees. The outcome of those skirmishes to try and get staff onboarded is that wage inflation in the sector is fairly explosive. As I say, 11.75% year on year in Q2. What does that do then to your cost base? Well, it raises the costs. And if you assume a fixed selling price, that narrows your margin. And it means that fewer projects are viable. And so that's really the challenge. And costs generally are still rising, Carol, in the sector,
I think it's interesting that you described the wage inflation for construction as explosive. Is this reflective of our shrinking labour force, or is this something that we're seeing outside of Ireland internationally?
Yeah, so it is interesting, Carol. So as I say, there was a pullback of about 12,000 people in the labour force survey in Q2, working in construction, about 160,000 compared with 172 in Q2 2023. So why is that? Maybe they're being poached into other industries. Maybe they're leaving the country. A lot of the migration that we have had into the country that you would assume would provide us with a source of construction labour. In fact, it's been women and children, particularly if you, for obvious reasons, if you look at the inflow from Ukraine. So, and of course, many other countries have a housing shortage and need to retain their construction workers in those places. And of course, what does that lead to? It leads to wage inflation in those locations. And if you can get, a good wage in your home country, why would you move to somewhere else? So I think there is no doubt at this point that is one of the barriers. Yeah.
Yeah. John, it's apologies. I know we've gone over time, but there was a lot in this particular report. I think that's worth breaking down. So, and we haven't had an opportunity to touch on all of it. So I would recommend for anybody operating across the built environment, just take a look at that report today, because actually there's a lot of interesting reading, particularly in the month that we're having in terms of maybe data around planning commencements, planning completions, but also the Unite union strikes that have started and are set to continue on construction sites. So there's just a lot happening at the moment. So it's a good time maybe to take some time to read through the report and understand some of the dynamics at play. Also, John does have an opinion piece in the Irish Times today that is definitely worth a read, that will add a little bit of extra perspective. John, as always, thank you so much. You're always great to put a sensible slant on this and to help us understand not just the data, but what the data is telling us. And I genuinely appreciate your time. Apologies, we've gone a little over today. Sorry. No problem, John. Thank you so much. That was John McCartney, Director and Head of Research at BNP Paribas Real Estate and Adjunct Associate Professor at UCD. My thanks as always to producer Katie Tallon and to the production team at Hear Me Roar Media, and also huge thanks to our show sponsor, daft.ie, Ireland's most visited property website. And thank you indeed for tuning in. We'll catch you on the next episode of the Property Roundup. In the meantime, please be sure to check out all of the other Irish and international real estate and construction shows here on iPropertyRadio.com.